Hey guys, welcome back. And now we're in the new year.
Happy New Year, guys.
Yes, Happy New Year. 2024 was a great year for us, I would say. But if you talk about the real estate side, 2024 was actually one of the slowest years that everybody went through.
Yes.
Even anywhere from people that were just buying their first condos all the way to developers who are, walking away from projects. So it was a very difficult year. But 2025, if you look anywhere, every single article that you see is positive about 2025, what's coming. Home prices are going up. There's going to be more activity. Interest rates are coming down. So everybody's very hopeful for this year.
Yeah. And elections are happening.
Yes, and elections are happening. So everybody is feeling really good. And we thought we'd do a podcast for our investors. So whether you're a new investor, whether you're a seasoned investor, whether you're a residential investor, commercial investor, you name it, this podcast is going to be a great one for you guys to listen. So grab a cup of coffee, sit back, relax, and enjoy. And let's get started.
Yep.
Yeah.
Bring it on, Maria. Let's talk about real estate, which we love.
Exactly. So I do have some pointers here on my phone, so I don't forget of things that we're going to be discussing. Before we start, I do want to emphasize, I know we've talked about this before a lot of times, but just talking about how real estate is not something where you will get rich very quick.
Yeah.
Real estate is a long-term game.
I always said it as you saying it is right. Real estate is, guys, not to make you rich. It's about making your wealth, growing your wealth. That's what the real estate is about.
Yeah. And we always say this as well, that if you are losing money in real estate, it's because either, you stretch yourself out too much, maybe something, a bad circumstance happened, but you always have to remember that this is not like a gamble. This is not a lottery ticket or anything. When you're buying real estate, you have to take it in the long term. The only time you're stuck and you have to sell your property at a loss is if you're stuck.
Exactly.
Otherwise, you hold on to that property and you will not lose money. So for a lot of our seasoned investors, they already know this. But for a lot of our new investors, we do want to start out by saying that do not get into real estate if you think that you're just going to make money in the next 3-6 months. No, that's not the plan. We actually tell our investors that if you're going to be purchasing a property, have minimum 3-year plan with that property, that you're going to be able to hold on to that property for 3 years.
Yes.
Yeah.
Agree.
So somebody just starting out, okay? This is their first property that they're buying out. What is going to be the biggest advice that you would give them?
A first-time person who's buying it?
Investor,
as an
first-time investor.
I would suggest them to go baby step. Take not too much of an aggressive approach. Don't try to buy more than what you can afford it. Start it with even a condo.
Yep.
Yeah, rather than buying even a house, started with a condo. Put minimum down payment, which is going to be 20 to 25%, and slowly, gradually, once your property start making some equity on it, growing equity on it, and then you think of another property. Yes.
Yeah.
Yeah,
What's a
that's
rule of thumb you would say that they should then sell that property and buy a new one?
Once the down payment is double.
Okay.
So if I put $100,000 buying a $500,000 condo, the day after paying all the expenses, I have expenses means not the capital gains, but I'm talking about realtor expenses. Everything I net with $100,000 minus the taxes, I will sell it so that I can put that money into another property. And again, the same strategy. Keep doubling your down payment. Keep rotating that money. As an investor, you should not hold on to one property for, yes, we have said it in the beginning, it's a long-term plan. But Maria, even in the long-term plan, you have to be having a smart strategy. Yes, your vision is a long-term, but if you can make money in 2 years, have it. Have a set goal. You can change a little bit here and there. It doesn't need to be prominent. Okay, first day, you will have all the goals, but have it an idea. Like, this is my strategy. I'm going to buy a condo. The day my down payment gets double, I'm going to sell it. What I'm going to do with that double the amount, I'm not going to go on a vacation. Buy a bigger property, which can be a townhouse or can be a house. Slowly, gradually, you start implementing it and you will see it. The magic will happen. I have grown my portfolio like this. I have helped hundreds of my clients doing the same strategy. They're doing it. Doubling the down payment in residential, keep flipping it. Yeah. Because then which we can discuss about it is it could be overwhelming for a first time buyer. But I wanted him to go to that strategy where from, let's say, down the road after 10 years, he can buy commercial plazas.
Of course.
That's the real wealth is.
Yeah.
Buy those commercial rental properties. Let your property get appreciated. Let the tenant pay all the mortgage expenses. Triple net leases are there. They pay everything.
Yeah. I would also say, like, as a first time investor, you should always look also like do not go over your capacity. If your capacity is to buy condo,
Yes.
do not stretch yourself out and buy a house, right? Go as long as you start small, that's all that matters. But the main thing is that you start.
Start, yes.
Yeah.
Start it. And don't buy. I don't understand how, from where these people get some of the clients get this conclusion that strata properties doesn't grow. It does grow. If that was not the case, these developers would not be building condos because nobody would be buying it. History can tell it. Look into it 10 years ago, what the condo purchase price was in Surrey
Yeah.
and what is now. Yes,
Yeah.
definitely land is going to appreciate more. But if you can't buy land, buy something, as you said it. Start.
Yeah.
Get into the game.
Yeah.
Goes baby step.
Yeah.
Point is, we wanted to be rich overnight. We wanted to buy a big piece of land, which is 7,000 square feet, at least a land. And if we can't buy it, we're not buying anything.
Yeah.
No, that's a wrong strategy.
Exactly.
If you don't have the resources now, the
Yeah.
means to buy now, definitely you will not have it next couple of years again.
No, because every single year the prices will keep going up.
Going up.
Right?
Unless you get a lottery or unless you have a confidence your business is going very rapid pace and you know you will make that down payment. But still, even if your business is going at a rapid pace and you're going to make a decent amount of money after a couple of years, don't forget the property will also appreciate.
Yes.
So you are a kind of losing it. But
Yeah.
put some that money which is sitting in your bank, $100,000.
Yeah.
Put it into condo,
Yeah.
and after 2 years you can sell it.
Yeah. A lot of people used to think that if you purchased for example, townhome prices will never reach $1 million. And they did. And even right now, there's a lot of townhomes that are close to $1 million,
Yeah.
right? But the same townhomes used to be $500,000.
Yes.
They're still strata properties. They're still making money on those properties. Same with condos. Like I remember when I was in high school, I went to Queen Elizabeth. So the condos that are by like Surrey Central area,
Yeah.
I remember at that time, like one of my friends, they like won through, they got, not won, I shouldn't say that. They got money from ICBC. I treated it like lottery. They got money from ICBC for like a claim that
Yeah.
they had. And they took that money and they invested in one of those condos. And at that time, I don't remember, like, don't quote me on this, but I believe it was around like $200,000. Like something dirt cheap. This is like from the start. And he bought like a couple of them. Okay. And everybody was like, you're so dumb, like buying in Surrey Central, this and that. And that guy now, like, you cannot find the same 2-bedroom ones around 500K even. And he had purchased around 200K. So there's no way you can say the condos are not going to go up. They definitely will go up.
Yes, not at the same pace as a land, the
Yeah.
single family lot is. But that also,
Look at your down payment.
You get what you pay for. So
Yeah.
you are putting less money. So
Yeah.
your profits are not going to be in millions.
100%.
Right.
Yeah.
You start from somewhere rather than not starting it. One funny story is what you're telling it about.
Mm-hmm.
It relates with me too. I thought you were talking about me because I also, whatever the money I got it from ICBC, I invested into my first pre-sale townhouse.
Okay.
And I made $200,000 out of it and never looked back. Buying property is rotating property, but that first $200,000 was very important.
Yes.
The townhouse, I booked it with $25,000 down.
Wow.
Yeah.
And then you made 200K off of that.
Yeah.
Did you do an assignment or did you actually close it?
Close it.
You closed it. Okay. Then you did it. Yeah.
After expenses. So I purchased it for 400 something,
Yeah.
410, and I sold it for 630 something.
Damn.
After paying realtor,
Yeah.
I made that much money.
And then you just invested that and keep rotating it?
Yeah, I purchased a house in Chilliwack and then I purchased other things. Yes, my operating business, which is real estate, also helped me to buy, but that was a big boost for me
Yeah.
to keep rotating the cycle, keep
Yeah.
buying real
Yeah.
estate. There's no form of real estate which is a bad real estate.
Yes.
Put it this way. Like there's no form of real estate.
Yeah.
Any real estate you buy, it is a good real estate as long as you're paying a right price for that and you are doing your proper due diligence on it, that there's no issue in a property.
Yeah.
And that's what it is. Every property has its own price also.
Yeah. 100%.
Right.
Yeah. And one other thing I was going to say, like we talk a lot about our investors, like what type of properties they buy. And we've told them time and again, like buy properties where you can add value.
Yes.
Right. So for example, let's say you can't afford a detached property, right? Buy something that's run down so you can renovate it, right? Something that you can put a basement suite in it if it already doesn't have a mortgage helper. So
And
those
nowadays with the new zoning, sorry, I'm interrupting.
Yeah.
With the new zonings, if you don't know, guys who are listening to this podcast or watching it, city has amended a lot of rules and regulations, and it is very easy now to make a legal suite than previously it was. Now you can make up a garden suite too. There could be a fourplex too. There could be a triplex too. So there's a lot of other things. As an investor, it's very easy now to do those things versus it used to be probably a year ago,
Yeah.
or 1 year ago. So so always put, yeah, what Maria is saying, 100% I agree, Maria, with you on this one, is that you put your money into something where you can put value into the property. Do some
Exactly.
work on it.
Yeah.
It could be a rental suite you can build on it. You can put up a garden suite in there. You can make a coach house.
Yeah.
So do something on it.
Yeah.
Don't, hope for the market to go up.
Yeah.
And only then you will make. That's not a
Exactly.
right strategy.
No, you shouldn't be speculating,
Mm-hmm.
right? And more than that, also have a plan B for it. So let's say your plan A is, I'm going to renovate this place, I'm going to add a suite, I'm going to sell it, right? Sure, that's plan A. But also have plan B. In case if I can't sell it at the price that I want, in case if I can't do this, I should be able to rent this place out, and I should be comfortable with the difference that I am paying out of pocket for that. So maybe let's say your mortgage is $6,000 and the rent you're going to be getting is $5,000. Then you should be comfortably being able to
Yeah.
provide $1,000 every single month for that property. So have those numbers planned out. And I feel like if you really financially plan out everything with these investment properties, it's going to be much easier for you to take that move. Because a lot of times people actually get scared of jumping in because they feel overwhelmed.
No, yes, don't do that. And also make sure, yes, you're right. Again, is the affordability part is.
Yeah.
Like if I'm having a shortfall of $1,000, whether first thing first I have to see it, can I afford
Yeah.
$1,000 for my pocket every month for at least next 3 years?
Yeah.
And I also, one more thing. Yes, if you can afford it, don't count it as a negative, as a loss on your property. Remember that $1,000 is going towards your mortgage. If not the whole $1,000, probably 50% of it is going to your principal, or 40% is going to the principal. On top of that, if you pay $12,000 annually, $1,000 a month, 12 times it for 3 is $36,000. Your property will grow much more than $36,000 in 3 years.
Yeah.
So do the math like that. Don't consider that that's a loss you having it every month from
Yeah.
that property. No.
Like, for
it's
example-
going towards your property, your mortgage.
Yeah. Like, for example, a lot of people talk about cash flow. I want to be cash flow positive, right? You have to kind of weigh it out. Like, for example, in Vancouver and Surrey, you're not going to be able to cash flow positive.
No.
It's very rare. If you do, I would be shocked.
On a minimum down payment, no. Which is
Yes.
25% down payment, you
No.
cannot find something which is going to be a positive cash flow. First of all, you cannot buy a property, commercial property, rental with 25% down in Lower Mainland.
Yeah.
That's next to impossible because cap rates are low.
Yeah.
So yeah, that's another thing is.
Yeah. No, we'll transition into commercial in a little bit, but even for the residential,
I'm dying for the commercial.
I know
I wanted
he
to
is.
go into commercial.
We have to start with the investors that are just starting
Yes.
out, and then we're going to go into the seasoned investors. But for those of you that are starting out, this section is really for you. What was I saying before Jas rudely disrupted
My
thought
apologies.
process? What were we
You
talking
were telling
about?
about the. Even I forget now. What were you telling about?
Two people with ADHD doing a podcast.
Yes. No, you were telling about like how people should put money, do some work on it. Don't speculate the market.
Yeah.
Pretty much we covered everything
Yeah,
on
I
that
think so
side.
too.
Yeah.
Yeah.
So we can go to the next one.
You're right, I think. Yes. The last thing we were just talking about is like have the courage. If you can do it, don't be scared. I know a lot of people talk about, this is happening, that's happening. 2024 was such a bad year, right? I agree. But the thing is, if you have the money, this is actually the best time for you to invest into the market and get yourself into the market.
On recession.
Right? Yeah. I know we say don't stretch yourself, but also don't be afraid to get into the market. A lot of millionaires are being made during recession.
Yeah, during
right?
recession.
So do not lose out on that opportunity. Get into the market, run your numbers. And if you don't know how to run your numbers, you can always contact us and we can do that with you as well. To
Or sit with your realtor and mortgage broker
course,
and
yeah.
they can run it too for you.
100%. And then now that we have covered the basics for the people who are just getting into real estate, now let's talk about what your thoughts are on seasoned investors. People, when I say seasoned investors, I mean somebody who already, let's say they have already owned an investment property. They already have one that's a residential investment property. Now they're thinking, should I grow my portfolio, go more towards adding more residential properties, or should I now maybe segue and buy something towards commercial?
No, before even we going to commercial, we will come back to commercial. Even the people who are already investing into real estate, make sure how you are investing that money, how you're taking that money out of your operating company. If you are self-employed, majority of the people are going to be self-employed people who will be buying it. The reason for that is affordability wise, a salaried person, very few people will able to afford more than 1 or 2 properties. Whereas if you are self-employed, your income can be in millions too. So that's where I'm giving an example of those people who are making this amount of money. before you're doing anything, make sure your accounting is in right direction. And this is not a legal advice. This is from my personal experience. I have seen my clients are doing it, and I have done it in my own real estate portfolio too. Having it structured properly, because when you are getting into this investing game of real estate, it is a very serious investment, and you don't want your hard-earned money going. Yes, you're buying a good property, you're doing all the things correct, but end of the day, your money is going towards CRA.
Yeah.
You're paying too much taxes.
Yeah.
Not saying don't pay taxes. I'm all in for paying taxes.
Yeah. But don't pay
unnecessarily paying taxes. Exactly. Don't. And there's a legit way how to do it. Otherwise, I would not be coming on a camera and talking about it. Yeah, this is all it is. You can check with your accountant too.
He would be selling it on the side.
On the side. But no, on a serious note, guys, there are some strategies. For example, I can give you is have it an operating company. Let's say I have an operating company and there is about $500,000 sitting in there, and I wanted to buy a residential property, not my primary home, but a residential property as an investment, and I wanted to pull out $300,000 as a down from there. I've seen it. People, what they do is they take out the money directly from the company, put it under their personal name, and give it to the bank as a down payment. That's the worst strategy you guys are doing it. What happens with that is you are paying actually, either you will be taking out as a dividend, so you will be paying high taxes on your personal income, because or your personal income obviously going to be much more taxable. Tax bracket is much higher versus corporate. Secondly, either you're taking out a loan, and that loan will always be there on your personal name showing it, or you have to keep bringing money from somewhere magically and start putting back into the company, which is not going to be possible. The best strategy is open up another holding company. Take out, let's say I made $500,000 this year, and I only need $100,000 for my household expenses to maintain my lifestyle, my mortgages, my grocery, my kids' fees, whatever it is, car loans, whatever it is. The remaining $400,000, I will have that $400,000 sitting in my operating company. Two benefits you get it. One, your company financials will look stronger because those are retained earnings. Retained earnings are the money which is after taxes, how much you have it in your company. Bank love that retained earning bracket. They don't look into how much is your revenue, the sales. They look into at your bottom number, after taxes, how much you have the money in there. That is where your financial, you can take leverage on it. Another benefit is going to be, you're going to be saving a ton of taxes on it. How? What you do is, you take that $400,000 and give it interrelated dividend to a holding company. There's no taxes on it. Believe it or not, you can ask your accountant too, there's no tax on it. You can interrelated give a dividend to your holding company and let that holding company buy your real estate investments. And when you're buying a real estate investments, have this main holding company never be an owner, be the owner of that property. Have another open up another company, let that buy, and this main holding company, which is ABC company, where you put your $400,000, make that company as a shareholder loan of your new asset which you have purchased it. And this way you can keep building on your portfolio. If you always seen some investors are buying properties, 8, 10, 15 properties, how they're buying it. Yes, you need a down payment for that. But the other way how you get the financing is, this is how they have structured it. This is the right way to structure it. Holding company, it's not going to show up in your credit history too, and your capital gains are going to be less than your personal name is going to be. So sit with your accountant, talk to them, see what they advise. This is how I'm doing it, mine own, and I have seen a lot of savvy investors are doing it the same way. So that's the right way to do it. This is my opinion.
So yeah, for seasoned investors or investors that are trying to grow with their portfolio, before you even start buying something, make sure your accounting is done correctly.
Yes,
make sure your
important.
corporate structure is, so you sit down with your accountant and make sure you have a good accountant. Your accountant knows what they're doing and can give you proper advice, right? And then from there, make sure you structure it properly and then buy properties.
Please don't judge the accountant on the basis of who says that I will help you to pay less taxes to the CRA in terms of writing out more expenses. That's not the right strategy to do it. The right strategy is, which just I told you, is open up a holding company and give interrelated dividends to that. What you happen is, when you're putting up an unnecessary expenses, you're showing it, your company is getting weaker and weaker. When you go to the bank, they don't like it. They wanted that bottom line retained earnings to be solid. So pay taxes to the CRA. If you pay $10,000 to CRA, you can get at least $100 to $200,000 extra from the bank, which you will never able to get it. So that's how you grow your portfolio. Do smart investings, guys.
Yeah.
This is very important. Sit, as Maria said, I agree. Sit with your accountant and have a proper planning how you're going to do it. And in case if somebody wants it, again, this is not a legal advice, but we do free session sitting one-on-one planning and can guide you, help you, and can connect you if you don't have a good accountant or a lawyer. We work with a very great people in this business who have been in this industry for many years, and they know what they're doing it. Unfortunately, a lot of professionals in this industry don't know what they're talking about, what they're doing it. So work with those professionals who have done it and who are still doing it.
And if you don't have those, we will give you our
We would love to do
contacts.
it, and there's no cost for it. And you guys are not obligated to buy real estate through us. Why I'm doing it? I'm not a saint. I'm not doing a charity here. Maybe something I'll give you a good information down the road. You feel like, okay, I'm the right person to work with you too.
Yeah.
But there's no obligation. If you wanted to sit on that session, we will give you the whole blueprint, how you can structure your company portfolio. And go from there. Check with your accountant too, whether what I was telling was right or not.
Yeah. So
Anything else, Maria, we need to discuss about?
no, do you want to say anything else for this year for our commercial investors or
Commercial
clients that are
investments,
just
I
trying
would
to get into?
say, no, I would rather say that now we're talking about savvy investors when we are talking about it. Let's say you already have it, you know this game. Guys, buy rental buildings, rental strip malls, plazas. That's your wealth gonna grow on. I'll give you a small example of a property my client has purchased it recently. The property value is 11 million. Yes, it's a lot of money. But look at the numbers now. When you're buying development properties also, you're putting a lot of money in there. And the risk is too big. And especially if you're not a full-time developer yourself, don't go to developments. I have done it. Again, luckily I was able to make money on it because the market went up. But that was not a right strategy for me to do developments. When I say developments, I'm not talking about building one house here and there, renovating it. That's okay. Development means buying a townhouse site, investing into it. It's a big asset, and there's a lot of information you should be knowing prior to getting into it. And if you're a doctor, you are a dentist, you are a pharmacist, or you are a business owner who have a pool of money, some money sitting in their bank, buy these commercial rental buildings. Coming back to the example of, I just sold one of my client a property worth 11 million. It is little less than 11 million they got it for. And they had to put 2.7 million down in that money. Commercial building. And their mortgage is around $41,000. The rent net after paying all the operating costs is $58,000. They're putting 2.7 million in there. The positive cash flow they're getting it is $17,000. And on top of it, the property is going to appreciate. Their whole mortgage, which is about $41,000, is paid by the tenants. And it's a medical building. There's a pharmacist, there's a chiro, there is a physio, there's a doctors, there's a gynecologist. All the specialists are in that building.
Yeah.
It's a 32,000 square feet huge building next to the hospital.
Probably at least like 30 medical professionals in there. Doctors.
So this is what I meant by when I tell people, create your wealth. This is your wealth. Why would on earth you will sell that property? And by the way, these people also, majority of them don't sell these properties. They only sell those properties when they are retiring. That's why it's very difficult to find these kind of buildings too. But in past, let's say if I think of top of my head, last 6 months, I've sold about 15 properties, and I'm not exaggerating it. These kind of properties I've sold it, and I know how to find it. It's difficult, but it's not impossible. If you're working with the right pool of team, things can happen. Even if you don't if you can find it on your own also, do it. But go for these kind of properties, which is going to be giving you a passive income. And now what another magic happens is, when the market goes up, the interest rates come down, the cap rate is going to come down. When the cap rate comes down, the property value will go up because the rental is coming. Okay. You go back to the bank, reappraise the value of that property. Same property in next, let's say, right now we got it for 6.5%. Let's say this property after 4 years, the cap rate in the market is 5.5 million. You will reappraise the value of that property, and the equity, I don't know the numbers right now in my top of my head, but you will be at least with 1%, you will be having at least 1.5 to 2 million appreciation on it. Refinance it. The two benefits you get it with that money, you buy another property. That is a huge benefit. There's no taxes on it. because when you're taking a loan, zero tax on it. Second benefit, the passive income which you are getting initially, which is about $17,000, is taxable. And unfortunately, it's 50% taxable on it. So now you are break even because your mortgage is going to go high. You have taken that 2 million out. You break even, no taxes here, and
going to
also
offset
making
that.
buying another property. So tell me if there's any other strategy which is better than this. This is how people are doing out there. They don't want it. You guys should know it. And it is happening, guys.
So for
This
seasoned
is great
investors,
strategies.
how much do they need to get started?
At least $1 million to start a decent. You can start with $700,000 too, but to begin with, I feel like $1 million is the sweet spot where you can find decent amount of property close to 3 million, 4 million. You can get it because I'm not a fan of buying something like a commercial unit because you will be having a negative cash flow in it. And it's a strata unit, there's not going to be much of appreciation. Try to buy freehold property, free land property. Freestanding, yeah.
Yeah.
Standalone.
Yeah. We
Standalone
changed that. Yeah, we kept on trying to like standalone. Yeah.
Standalone buildings.
Standalone buildings.
Yeah.
Yeah.
Or commercial strip malls.
100%.
There was a property, Langley Willowbrook Mall.
Mm-hmm.
It is on sale. How much was it? 130 million. $130 million Langley Willowbrook Mall is for sale. And imagine a person who has purchased that. Obviously, this is a REIT. Usually, these kind of properties not being owned by individual. This is a REIT. If people don't know what is REIT, it is called Real Estate Investment Trust. But it's like a lot of people, like a hedge fund. That is what. But there are a lot of people who individually also own these kind of properties. What you need to do if you have that kind of a property, yes, that piece of land would have been purchased probably 30, 40 years ago. Yeah. But now look at it. You give it to your coming generation. Here's your retirement plan. Not for yourself only, for your coming generations too.
Yeah.
Take it.
Here you go. You get a car. You get a car. Everyone gets a car. Everybody's living a good life.
Yes, that's what it is.
But that's going to be a lot of our investors that have been buying these commercial plazas.
Maria, I already have 3 people in pipeline who are looking for these kind of commercial plazas, and I'm trying to find out. It's difficult, but it's not impossible. We have done it many times, and we have 2 properties which are very great properties. I'm in talks with the seller's realtor too. Yeah. So let's see what happens in there. Yeah. Well, that's a great strategy.
It's a great start to the year. But for those of you that are watching and you have questions about this, feel free to get in touch with us, and we will be able to explain all of this to you guys in more detail. But thank you so much for joining us today. It's been a great session. If there's any specific topic within this podcast that you want us to elaborate on or do a podcast on that specific topic, do let us know, and we can do that as well. And anything else that you want to share with our viewers?
No, this is, as Maria said it, do leave a comments for us and let us know what you feel like about it, because we just started this new strategy we have implemented. Once in a month, we're going to be giving up not only a market update, but just talking about smart strategies, how people can make money in real estate, what strategies are not good strategies, what strategies are good strategies to our understanding. So that's pretty much it is. And thank you guys once again for watching us, and once again, Happy New Year.
Yes.
And we will see you next time.
Yes.
Good.
Bye.
Take care. Bye-bye.